I think being tied into the tens of trillions of dollars of managed assets is important. I mean, there's really tens of trillions of dollars managed by RIAs or kind of big bank like broker networks, and a lot of that capital literally couldn't get into Bitcoin. And so it's either stuck there because it's a retirement account or just because that's where the person wants it. And they might be open to putting 1 or 2 or 3% into Bitcoin. It just has not been an option because none of the vehicles have been kind of up to par for those types of environments. And so to the extent that they're available, that is important over a multi-year time frame. That can add billions of dollars of inflow, which has a multiplier effect, especially when Bitcoin is very tightly held as it is now. And so it's not like it's a non-variable.
On January 7th, amidst the cryptocurrency industry's anticipation of the U.S. Securities and Exchange Commission's approval of spot Bitcoin ETFs, renowned macro analyst Lyn Alden stood out with her less enthusiastic take. While many Bitcoin enthusiasts awaited the SEC's nod with excitement, Alden's post garnered attention for its divergence from the prevailing sentiment. She remarked that, despite its potential benefits for price and liquidity, the Bitcoin ETF seemed mundane compared to the burgeoning local hubs and technologies facilitating decentralized custody of Bitcoin worldwide. At the time of Alden's post, Bitcoin was trading above $444,000, with analysts forecasting a surge to $50,000 and beyond. However, Alden remained cautious, citing the volatile price movements preceding the ETF approval. Analysts' opinions on the impact of spot Bitcoin ETFs were divided, prompting Alden to adopt a balanced perspective, neither overly optimistic nor overly pessimistic. In a subsequent interview, she clarified her stance, acknowledging the significance of institutional investors gaining exposure to Bitcoin while tempering expectations about its immediate impact, emphasizing its role as just one factor among many shaping Bitcoin's market dynamics.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The way I would probably put it is, and the way I put it in my research is that it doesn't really affect my view of the direction of the next 2 years, but it can add more magnitude to the upside than if these didn't exist. And so, for example, I'm doubtful that ETFs are going to drive the next bull market, but I think that as that bull market materializes, that's another ease of inflow that could make the bull market do better than it would if these ETFs did not exist. And so it's money tends to chase price, ironically. So it's like I think that the next bull market probably comes from the same types of directions that the prior bull markets came from, which is, we went through this bear market, a lot of the fast money's out of Bitcoin. It's kind of gravitated towards those strong hands, people that are dollar cost averaging in, people that just, they're like listen to podcasts like this and they don't really plan on selling for the foreseeable future. They're kind of locked in. And so eventually you kind of get that really tight supply situation. And then you get better liquidity conditions. So I've been kind of beating the drum for a while that Bitcoin is very correlated with global liquidity metrics, more so than any other asset I track. And it's also the inverse is true. So if I look at all the things that are correlated with Bitcoin, liquidity is arguably the highest. So when the liquidity goes up, that tends to be constructive for Bitcoin price. But then it's especially so when you've been in a bear market for a while and a lot of those loosely held coins have gravitated towards the stronger hands that are only going to come out with like a 5x increase pretty much. Right. And as like a starting, like basically once you breach all-time highs, when you start to get a little bit of distribution from those types of hands. And then also when you break all-time highs, that's when, people in their RIAs are saying like, why aren't we in Bitcoin? The ETFs came out months ago. What are we doing? And so then you can get some of the inflows, and that's where I think it could add to it. It's certainly a constructive, positive variable, but for me, it's not the key catalyst, most likely.
Do you think that the ETF holders are going to be more steady and thereby decrease volatility to some degree?
So I don't know if they specifically will, but I do think that on average, the more widely held something is, the less volatile it can be. And the more liquid it can be, right? So when Bitcoin's small enough that like FTX, like rehypothecating, $1.5 billion worth of Bitcoin can really mess it up. That's that when that kind of thing can happen, it's going to move price more. Whereas if it's 5 times as widely held, if it's 10 times as widely held, then there's fewer entities that can play games and kind of really mess up the price. And it's more, the asset's more diffused in portfolios that are not like quote unquote crypto focused. that all get liquidated at once, basically. And so, to the extent that people have it as a slice in a portfolio and rebalance it from time to time, whether it's the ETF or other vehicles. I mean, the ETF's now the most convenient vehicle for that. But then, there's also other ways to do it. That should, in theory, have a dampening effect on volatility. It doesn't mean I don't think we're going to have a big bull run and then probably a pretty big drop. But I think it could start taking the edge off in either direction, because if Bitcoin's way up and it's pretty widely held at that point, that can rebalance it back down to the downside a little bit. So if you look at some of the this past bull cycle was the first one that had like a rounded top. The other ones all had these like crazy illiquid spike tops,
right. Mm-hmm.
And this was the first rounded top. And unfortunately, the bottom was not as benign. There still was like a big kind of collapse because partially because of the FTX thing. But I think that's I would assume that's the norm going forward. Of course, Bitcoin can always surprise, but I think
yep.
that that those spikes are a sign of kind of a less mature asset, and then as it reaches bigger amounts and things like that, you should expect more of those kind of rounded type of price action, unless something extreme happens to it, unless you have a sovereign debt crisis in a major country or war or things like that.
The volatility of Bitcoin has long been a subject of intense debate, with many seeing it as a significant obstacle to widespread acceptance of the asset. However, prominent Bitcoin advocates like Michael Saylor suggest that this era of extreme volatility may be nearing its end. They anticipate a gradual decrease in Bitcoin's volatility over the coming years as more institutional investors enter the market. While Bitcoin may always be more volatile compared to traditional assets like bonds and stocks, the days of extreme 90% drawdowns could be behind us. Some, like Real Vision CEO Pal, even suggest that only 2 more cycles remain before Bitcoin's volatility diminishes to nearly negligible levels. Let's return to Alden's interview.
I take the under on those risks. That's part of why I think it's boring. I take the under on the upside, especially immediately from the ETFs, and I also take the under on the risks from the ETF. And large part that's because there's already like 600,000 coins in GBTC. Yeah. And so we're seeing coins come out of that bucket, diffuse into some of these other buckets. They're all at most of them are at Coinbase anyway. Except for the Fidelity one, and I think a couple others are at Gemini. And so you're seeing a diffusion of that. I think on average we'll see a net inflow, but as Bitcoin gets more expensive, the amount of coins that can be captured in ETF, even though the dollar amount might be higher, the number of coins is still pretty hard to get a lot of coins into ETFs at this point. Bitcoin already had 15 years of distribution. Ironically, if the ETF came out back when the Winklevi wanted it to come out, I mean, they had the foresight to want it. But if it came out then, maybe there would be more concerns about a very large percentage of it being kind of held in these giant honeypots. But now it's had 15 years to get out there. It's out in the wild, so it's hard to tame at this point. So I don't really have concerns around that. There's certainly concerns for people that are in those custodial environments, but I view it as less existential towards Bitcoin itself. And I'd further phrase it as it was inevitable. So if Bitcoin can't withstand an ETF, it never really mattered to begin with. And so I see a lot of, and to go after the Bitcoin critics here, some of them are kind of like, oh, Bitcoin had a mission and now that mission's lost because they used the ETF on it. It's like Bitcoin doesn't even know it has an ETF on it. Bitcoin is just Bitcoin. In this case, one country, their SEC and their court system allowed an ETF. A bunch of entities that are not affiliated with Bitcoin made ETF wrappers around it. It gives people one more buying access, one more kind of custody access, one more trading scaling scheme that's on top of it. But it's a global asset, and it's an open source network. And so I kind of view that as relatively irrelevant, other than the extent that obviously, if you do control a lot of coins, you have some power over how, like, say, hard forks turn out, for example. Yep. And so it's not that concentration doesn't matter at all. It's just that there's already some degree of concentration. Luckily, it's not that high, and I don't think the introduction of the ETFs really changed that. It just kind of shifts around where it is.
What are your thoughts on Alden's interview? While she isn't entirely optimistic about spot Bitcoin ETFs in the short term, she anticipates their significant long-term impact on Bitcoin's prices, particularly during the next bull market. As a macro analyst, Alden expresses greater bullishness on Bitcoin in the midterm, roughly from mid-2024 to late 2025, attributing this optimism to anticipated improvements in global macro conditions during that period, which she believes will benefit Bitcoin and other assets. Feel free to share your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.